So there's one question that we get a lot, especially post-COVID, and it's why Georgia? Or what makes it a compelling market for real estate investors? And in our opinion, it really comes down to what we call the migration map, which we think is a trend that continues to reshape real estate investing across the US. And after 2020, we've seen an interesting shift in where people want to live and work. So first, it seems like remote work and lifestyle reevaluation have pushed people away from high-cost urban centers. So gateway cities or markets like California, New York are seeing net outflows, while Sunbelt states, including Georgia, are booming. Migration today isn't just about jobs. It's about affordability also, quality of life, and even climate resilience. Georgia, along with Florida, North Carolina, South Carolina, Tennessee, continue to rank among the top states gaining residents. Atlanta continues to emerge as a tech and logistics hub, thanks to its strategic location and infrastructure. Plus, business-friendly policies and lower taxes are definitely accelerating corporate relocations to the southeast. From our standpoint, migration equals opportunity. Population growth drives housing demand usually, both in rental and ownership. Inflow markets like Georgia usually offer better cap rates and appreciation potential compared to saturated cities. And we're seeing investors targeting secondary and tertiary markets near major metros or at least seeking for higher yield and long-term growth. People are chasing affordability, or at least trying to, and that's where we come in. Demographics also play their part, as millennials and Gen Zs are forming households in affordable metros, while baby boomers are retiring and relocating to warmer, lower-cost states. That's boosting demand for both rental and ownership products. At Apex, we've aligned our strategies to serve both ends of that spectrum. And then as far as seeing more renters than buyers, it is our case, definitely. We think that rising home prices and interest rates where they are keeping people in rentals longer. But ownership still has a place. Some families prefer to pay the premium for stability. And that's why we keep both lanes open. We try to keep our portfolio diversified. We're very intentional about which submarkets we invest in for each product type, and we maintain a diversified strategy at all times. As far as capital, what we see is that capital in general terms is following the people. So institutional investors are relocating their portfolios towards high growth regions like Georgia or the Southeast, Sunbelt states. Built-to-rent communities and workforce housing are gaining traction in these migration hotspots. And in general terms, in our opinion, that's where data-driven site selection becomes critical, leveraging migration map, job growth, and infrastructure investments. Now, as far as how we keep our strategy going, that is where Apex Infinity Fund comes into play. It is built to capture these trends. It offers fixed returns up to 10% yearly with bi-yearly distributions and compounding options. It's fully passive, professionally managed, and diversified across build-to-rent, build-to-sell, and multifamily projects. With a minimum investment of just $25,000, it's a way for accredited investors to tap into the Georgia's growth engine without the complexity behind the scenes. If anyone wants to dive deeper, we've put together a Georgia market investment brief that breaks down the data, the strategy, and how Apex is positioning investors to benefit from its long-term migration wave.